Hello and welcome everyone to Gold Asset of the Day for the 2nd of July 2019. So first of all, what do you need to know as we go on with this week? So essentially, we've had some major news items over the weekend, as we mentioned on last week's commodity report, that you really wanted to watch out for potentially explosive moves off the back of the G20. And we have definitely seen that. In fact, gold's fall on Monday from the gap down that we've seen from Sunday through to Monday has been the biggest percentage decline that we've seen on gold since November of 2016. So what does that mean for you? Well, essentially, gold has now pulled back to quite an interesting zone here, around the 1380 zone, in fact, on Monday. And we're seeing support and buyers start to come in around that level. We're in fact trading at 1,393 US dollars per ounce at the moment. You need to know that hedge funds and money managers, they have again increased their overall net long positions in the latest week. You also need to know that we saw a lot of retail traders get liquidated on the recent breakout to the upside, where we cleared above 1,400 US dollars per ounce. In fact, last week we gave you the ranges that we were looking at. We were looking at evidence of support to come back in at 1,400, and to be very careful when the trade was with gold, when we were seeing resistance around that 1,430 to 1,438 zone. So what we mentioned last week was be careful in the lead up to the G20. Often you can see profit taking ahead of such a major news item, and also end of month and end of quarter profit taking as well. So if you remember, this time last week, gold was trading near 1,438 US dollars per ounce. Today is trading at $1,393. And just having that ability to know from a research driven point of view what will affect the market, where we're going to see profit taking, where you can actually buy back in instead of getting FOMO, which is the fear of missing out and chasing the move. You wait patiently to strike when you have an opportunity to get back in at a better price. And in fact, you can capitalize on both ways of the trades, where we've seen the dollar breaking out yesterday to over 2-week highs. We've capitalized that on dollar correlations over the last 24 hours. And it's been really great trading over the last week. And we've now got the non-farm payrolls at the end of this week as well. So essentially you want to look out for whether we're going to see strong data out of that. If we do, then that would potentially put the United States on track for cutting interest rates as we head towards the end of month FOMC statement at the end of July. We're looking out for that data, of course, as to whether we will see more confirmation and comments from the Federal Reserve regarding the potential to cut interest rates at the end of July. And of course, if they do go ahead with that, whether it's 25 basis points or whether we see a 50-point cut, then we will be looking out for the potential for that to support gold prices even further as we go into this seasonal time of year over July, August and September, where often gold demand does pick up. In fact, it's worth being aware that gold ETFs on this break back below $1,400 for gold have ramped up quite significantly over the last 24 hours in terms of buying, fresh buying coming in. We saw outflows at the end of last week. Again, end of quarter, end of month, big news item at the weekend, G20. Overall, we've seen positive sentiments from that as a result of positive talks between China and also the US, where they're going to come back to the negotiating table. There's going to be less restrictions with respect to Huawei, and we're also going to see the potential to ease up on some of the trade tariffs that have previously been proposed on China from the US. So overall, that created quite a lot of positive sentiment for the dollar, and we've seen this pullback on gold. But what do you need to know for this week now with respect to the ranges that we're looking at and what we can look at towards the end of the week too? So right now, gold trading at $1,393. I see support for the week between 1380 to 1390. We did gap down significantly on the open, so we gapped down from around 1410 down to the 1390s. We could see that gap get filled between now and as we go towards next week, or certainly the following week as well. So that would mean from where we are right now, approximately 150 to 200 point gap to fill. I'm watching out for that to see if we will see evidence of more buying coming in at 1390, see a rotation back to 1400 and then 1410, fill the gap, and then we need to see where the price action is later on in the week around the non-farm payroll. So just watch out for that. But again, use your research-driven approach, or certainly use our research-driven approach with respect to that. Keep an eye on the additional reports we'll be putting out this week as well. We covered that in detail on our week ahead commodity report too, exactly what you want to be looking out for. Platinum was a fantastic mover. We mentioned last week that we'd had that long position on platinum which hit profit for 300 points. We saw the biggest move on platinum on Friday in over 2 months. Platinum breaking out from $810 all the way to $840. I've had a lot of comments from those of you who followed our reports. You capitalized on that breakout on platinum as well. So well done if you did catch that move. Very seasonal play there as well. So really, those are really key items that you need to be watching out for this week. Again, hedge funds and money managers, they've bought again in the latest week, increased their overall net longs. This break below $1,400 has started to see more inflows back into gold ETFs, and we have non-farm payrolls on Friday. We want to look at that data to see what sort of impact that has on the Federal Reserve with respect to their overall narrative regarding the FOMC statement at the end of July as to whether they're going to go ahead with a rate cut. So with that, that's been Gold Asset of the Day, and I wish you good trading.